Okay. Hello, everyone. Jamie Saettele here. This is the Wednesday midweek strategy webinar. We'll be looking to do these every week. Wednesday is usually a good way to do it first, or a good time to do it. I want to obviously make sure everyone can hear me. So if you could let me know if you can see the screen, if you can see these charts. You should see basically 6 charts here right now. We'll be concentrating, obviously, on a few things. And make sure you can hear me, right? Okay, so it looks like we're good to go. Wonderful. All right. So again, welcome to the webinar, and let's begin. All right. So first off, we should probably start with. Hold on for 1 minute here. All right. I wanted to get all these this question box open much bigger. Okay. So why don't we start with the euro? I mean, we've got a ton going on here tomorrow with ECB coming up, and these webinars are not just going to be the so-called strategy webinars I like to call them, but it's also going to be educational, whereas you can get a sense of how I look at the market when Mike does webinars, how he looks at the market, right? So we're obviously involved right now in a short euro dollar position. Took that first target at 23.96. Was kind of hoping, I guess, that we'd get another pop higher, right, into 24.40, 24.60 before ECB in order to sell additional lots for this larger decline. But look, that's, we still have some on, so, can't really complain too much here. If we look at, the wave structure from the high in May, okay, no secret that the decline's quite extended. In fact, why don't we start first with, this is a really, really broad, we have a weekly chart here, and if I, look over the last, say, 6 or so years, I mean, we're getting into the bottom of the range, and just this week, or just a few hours ago, we touched weekly reversal support at 23.15. That's the close here from the 2012 low. So we're getting into that region of support, where we should kind of really start to be careful. Don't necessarily want fresh shorts here, but protect what we have. Where does this come in, basically this week, this trend line that goes off the 2010, 2012 lows, comes in at about, 20, what is about 22.20, 22.30 or so. So that's an interesting level to keep in mind. For me, though, this slope line, and why don't we start with a chart with nothing on it first, so you can get a better sense of how to look at, this. So this was just actually, maybe a few months ago, maybe in October, and was looking at the euro. And if you stand back and you look at a chart, you say, well, we have a pretty sharp decline. Your goal should always be to find where the proper slope is, okay? What's actionable, and if we look at, just start with this very simple line here, make a parallel, and we notice that we end up hitting here, 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 all these highs here. This line, and this line really alone, is kind of the reason why Monday's entry for the short was 25.05. You can see we shorted right here. That short is still in play, and we could afford a pretty tight stop of 25.35, which was above this high, because it was, if we got up to that level, we would have broken this line, right? Now, of course, there will be situations where you take out You might take out a level and spike above it intraday and close back below, but luckily in this case that didn't happen. So the slope analysis obviously doesn't just stop there. We can go and take these parallels, because they have acted so well, right? They might act very, decent as support on the downside. Okay, so we're going to extend levels off of lows here in this low here. And we're getting really close, obviously, to this one, which comes in at about 2280, which I think I wrote that in the last night's update, about being at 2280, that level. So, for the Euro trade for tomorrow, as we go into tomorrow, really cognizant of the fact that we are coming up on a very big support level. The market's obviously quite stretched, and we're prone to a potential bounce. That said, at the same time, we can stretch a little bit more. And this is where wave analysis comes in handy, right? And then we'll combine the wave analysis with the slope analysis in order to really get precise targets and maybe even get a scenario in which we can go the other way. So again, 1, 2, this is obviously the third wave. The third wave always sticks out in hindsight, right? Because it's very extended, it's nonstop, it's sharp, momentum is extreme, all that good stuff, right? So what we then have here is wave 4. What are common relationships between waves 5 and waves 1? A common relationship between waves 5 and waves 1 is equality. So we'll see where that came in. We've already surpassed that level, I'm just telling you right now. So that level would have been 123.96. You can see we had that here at this time. I was thinking, well, maybe we have a low in place, but then, we were going off the slope analysis and kept selling against these levels. So the thinking was that we're going to have an extended fifth wave, which you can see on the charts on the swing page on the website. Okay, so that's not the case anymore as far as equality is concerned. So we'll get rid of that one. Another common relationship is for wave 5 in progress from this level to equal 61.8% of waves 1 through 3. So what we're going to do is we're going to take waves 1 through 3 and we're going to extend a 61.8, and that gets us 1965. That's a big move lower from here. Okay, so 1965, well, that, we're going to see if that comes into play with any slope levels. Okay, well, this one way down here would intersect it on about Monday. So if Europe, or if the ECB comes in tomorrow and does something totally nuts, I guess that would be a possibility. You want to have it in the back of your head that it's a possibility. I don't know how probable that is, but it is a possibility. If we move forward a little bit to the next slope line in time, it gets us to about 119.65 on Christmas Day. So that would be quite the Christmas present on the 25th, 24th, 25th. And then this one's all the way in mid-January. So I guess, we can keep that there for the time being, and just so you know that that level is there. Again, I'm thinking we get a bounce from this level here. And what's interesting when you look at these slope levels, we're not just connecting off this level. Look back in time and see, you can extend the bar out to the left and see if this hits any other levels. Well, it hit that low there. Doesn't quite hit the high, although that would have been very interesting if it did. So let's keep working with the targets. Okay. Other common relationships. Well, if this is wave 5, where would, and this is, let's say this is 1, 2, 3, and then this whole deal is 4, and I'll zoom in here in a second and show you what the wave 4 itself looks like. Where might wave 5 of 5 equal that 618 relationship? So we take the same thing, do that here. Okay, we're going to do that here. Well, we get a little closer to, let's see, go off here. You get about 2270, which actually that happens to be right in line with really tomorrow. Okay, so that's not that far below. That's just below the current level. All right, so 2270 is an interesting zone, if you will, to look for. Other Fibonacci relationships which are less known but also come into play. Wave 4, getting the 127.2 extension, and wouldn't you know that that level actually comes into play. Oops, sorry, wrong one. 127.2 extension of this right here comes into play at 2292. Okay, I'm focused most on these 61/8 of wave 5. So why don't we zoom in now, and we're going to take a look at. So there's the euro on the daily. We're going to zoom in and take a look at euro dollar on, say, an hourly chart. Right now, this is more or less the chart we've been following with these same lines, but that we saw on the daily that have been drawn, but superimposed, of course, on the hourly chart. So remember, I had marked this potentially as a wave D, and we were looking for wave E to get lucky and sell one more time up near 2440 to 2460 for new lows. Obviously, that has yet to, that's not going to happen. We're already at new lows, but we're still short. So there's a couple possibilities here when we look at the euro from 123.57 from a wave perspective. Okay, one is the triangle, in which you have waves A, B, C, D, E. For me, you'd like to see a little more prolonged wave E action, okay? So I'm not so sure that this is the correct interpretation. What I'm actually thinking is a little more probable is that this was the wave 4 within 5, and this is 1, 2, 3 is underway now, but these are corrective waves, right? This is 3 waves down. This, so far, is 3 waves down. We might be having a diagonal unfolding right now, okay? So this is a new chart that I was working with for tonight's update. So the question is, from here, what's the most likely path? Well, we already have I'll clean this up a little bit here. We already have the 3 waves down from here. Going to get rid of that. Get rid of that. Keep that. So from a measured perspective here, where would wave, if this is a 3 so-called, where would it equal? First one happens to be 2294. So you can see we have all that stuff around 2270 to 2290. At the end of the day, I put more weight on the slope analysis. Okay, so there's that this level down here that we're looking at. more weight on the slope analysis than on the Fibbo extensions. When they really come together, it's really beautiful. It's a wonderful thing. But if this is indeed is a diagonal, and how do we, fit this into our trading strategy? So what we're going to do, you're kind of seeing this in, how I'm looking to analyze and trade this in real time here. Is this like the work I kind of do when I'm getting ready to post, to post the timing updates. So let's say that this is actually 1, 2, 3. Well, we're already equal legs down. Okay, we're 127% of weight of this rally. So we're most certain, and we got this reaction line here. We're most certainly in a bounce zone. Okay. So what I'm going to do is see if we can find levels that would provide us with another sell for a potential wave 4 bounce. Okay. When we look at what often happens in the diagonal, a lot of times you'll get, let's say that you end up coming off down into here, 2270. The 50% would be about 124. Let's say that for some reason we stop right here, it'd be about 2415. Okay, and if we look across, there's just a good deal of stuff, at 24. Okay. So what we're going to do with euro here, going to see if we have any influence here. And to be better, so we're going to stick with these parallels, draw it now off of this level here, former support, potentially becoming resistance. Okay, so this is likely, this level here is something you're going to see in tonight's update. Okay, and the fact that it has kind of been a support resistance level, here for periods here with support. So now on any sort of bounce, you'd look for this to be resistance. Okay, and it does happen to kind of coincide with a little congestion here last night during Asia, say 2375 to 2400. This might be an area that we look for tomorrow morning with ECB. So, just a quick review, don't lose sight of the daily chart here, because we're coming up on a big target and a Fibonacci confluence zone with slope at about 2275. Okay, any changes that I make to the orders, well, obviously you'll see those in the tonight in the update, and I'll have laid out possible plans to sell or not sell into say 124 or something with new risk parameters. But that's kind of where we are on the euro. Okay, we're still lower. Dominant slope is still lower, but we may be nearing a point where we get 100-point plus bounce. Okay, before we get yet another low. So if not a period of consolidation. Okay, in a fourth type of a wave 4 type of scenario, right? Where if this is a diagonal 1, 2, 3, 4, 5. And the diagonal situation is somewhat favored just because I think there's several diagonals in other dollar crosses, okay? So there's the euro. Jonas asking, what does the dotted line between D and E represent? I think you're probably referring to this line right here. That's the month open price. That was the month open price for November, though. This is the month open price for December, right here, 124.50. Okay. I want to take a look at the British pound because the pound has been trading pretty clean, okay, between a number of levels. Like last night had pointed out in the update that so this also will speak to how how I think it's best to use the service. You can see this, the euro last night. We were hoping for, say, a wavy rally and just didn't happen. So, if we get that rally still from lower levels, you still might be able to short up around the region we were at last night anyway. But point is, you probably want to take some off around 22.75. I'll probably put that order in later tonight. The pound dollar, right? So obviously, I'm based in New York here, and London open 3-4 a.m. It's just not going to be a time that I'm going to be up at the screens. I'll be up at the screens at usually 6:30 a.m. On, but doesn't mean I won't put orders in that I think will probably trigger during London. So to give you a sense, last night it was 156.10.25 as a reaction zone, right? First, let's talk about why that was a reaction zone. So 156.10 was the month open price. Okay. 156.25 was just these levels over here, former lows here. Okay. You can see these lows. And the idea was to buy into 56.10, 56.25. First target was something on the order of, I think it was 157, with the second possible extended target upwards of 157.80 or something. Obviously, the market didn't trigger that entry. The entry was 156.13. The low was 156.18. So it didn't exactly trigger. But, if you're using this information, if you're sitting in front of your desk, during London hours and you're there for the open and you see the market trade into this level and hold, it doesn't mean that you can't take the trade, right? So, just because the exact pip isn't reached doesn't mean that you, as a a trader yourself, can't take that position if the market's acting in a in a manner that's consistent with how you would trade. Okay, so that was how we got the zone 56.10.25. Always like to buy on a slope line, of course, and it seems odd to say that you had an upward sloping line here at for the pound, but you actually did, right? If you looked at the slope of the recent trade back basically to the November low, it's up to sideways, and this was the upslope, and this parallel line, that's all it is. This parallel line and extended off below here, and that's how we got that confidence to put to trade into that level with a really tight stop. So you have that. You also had this pitchfork here, which is these 3 points here, here, and here. Okay, so you had a nice confluence there. Now moving forward, the pound dollar may very well be in a triangle of its own, right? You have wave A, wave B, potentially wave C underway. And if wave C is underway, we might get something like A, B, C within wave C. Wave C might be a zigzag, right? So what we'll do, we'll take this. Where do you get two equal legs at? You get two equal legs at 57.97. Okay? 57.97. Get that intersection up here. It's around, when's that? 57.97. It's during London hours in 2 days. So on Friday, actually, this occurs on Friday at about 3, 4 in the morning in New York, so during the London Open. Now, obviously, I have no idea if the pound dollar is going to make it up there, okay? But if it does, I'm prepared to sell into it with a really tight stop, right? I mean, we're talking about trading up into 57.95, 58 with a stop at like 158.30 for potentially all the way back down here, if not a break lower, right? So this is, it's really important to have, that's why I do this, work, have these charts prepared so that when it comes time to pull the trigger, I don't have to sit there and think. I've already done all that, and I've got all these zones and everything laid out. Okay. Now, if we're looking at 57.97, maybe there's a chance to get long for that, and there is. Okay. So when we look at, get rid of this for a second. So we look at, I make reference all the time, of course, to the high bar close, especially for days and weeks, daily reversal support, daily reversal resistance, all that. Well, it works for hours too sometimes, especially when you're in a tighter range, as we have been for a lot of markets recently. And okay, and we have that level now right here. It's the close of the London Open this morning, the bar that made a low right here. So that's 56.45. Okay, so 56.45 is now potential support above this low. Okay, it's premature, but I'll draw this fork here and see if there's any influence at this point. And right now, shift that. There does appear to be, because you can see the median line right here, pretty good influence at that high. Okay. This also gives you a potential high point up here as well. This would actually be during the U.S. morning. So when it's an early, you're not sure, if it's really going to be an influence on price or not, I'll make those lines kind of really light gray, just because you kind of want to know they're there, but you don't want to, have them override what's important and what's been influencing price so far. So as we head into tonight and into tomorrow, the pound, which has been relatively strong compared to other European currencies and currencies in general today, the pound's actually outperformer. You have a possible kind of buying into 56.45 area down here with a tight stop, for a run all the way back up towards 58 before you go lower yet again. And this is all a very fancy way of saying that the market's in a range, and that there's a way to, this is how we're playing it, right? But trying to be as precise and specific as possible with entries in order to really minimize the risk and define the risk. Want to talk about a few other pairs heading into tomorrow. So we've been focusing on one of the pairs that I've had on the watch list for a while now is the dollar South African rand, and this, when you miss a trade, it's kind of bugs you, right? But we've been this is the chart that's been posted on the website for a while with this text here. Watch these bold gray lines for support. We never got into them. Market turned up ahead of schedule there. So Does that mean we just give up? Of course not. We might have a triangle here too, a larger triangle from the October high, A waves A, B, C. This might be a wave D. If it is, you might be getting some resistance pretty soon here. You got two daily reversal supports, 1125.59 and 1132.93. But understanding that the larger swing is most likely still on the upside, I do want to align with the larger trend on the upside. So, you know, when I zoom in to the hourly chart, I'm looking for the right slope again, right? So in order to do that, you can see, well, what did this trend up here look like? Okay, that's a super sharp advance. We'll see if that's going to, you know, meet anything. Well, it's very tough to say, you know, and it's early. You might want to keep these in mind, especially because you have an intersection here, okay, tomorrow during Europe. Now, I would actually not quite look at these yet. It's a little too steep. What I would pay attention to, though, is this, just this alone. Okay, the former pitchfork, resistance, and just like anything else in technical analysis, or markets for that matter, former support oftentimes becomes resistance and vice versa. This was former resistance, okay? You know, influence price at several highs, and then it broke out with authority. You look for this line now to become support, okay? You know, the zone that I'd be looking at specifically is probably about 1110, right, which is close to the month open, very near the low down here. So if the market gets down into dollar rand down into 1110, you could have an entry. You can also draw an early fork here as well. Okay, and see how the market, if it gets there, if it responds to this level, okay, to the lower fork, lower slope line. A lot of drawing pitchforks and whatnot is about trying to find the right slope to work with, right? It's not just the drawing of the forks. It's to see if prices are influencing at those levels or not, okay? Sometimes you have to play around with it and see, you know, if there's better levels to draw, okay? You know, in this case right here, this fork actually ended up working out pretty well as far as the support was concerned, okay? Unfortunately, we were looking at lower levels because we had much bigger parallel supports down there. So this is kind of the stuff that I'd be looking at here. Potential support there. A lot of times there's going to be a lot of crap all over my charts, and you will never see all that because I clean them up when I publish them. Greg has a question here. Should you trade only with slope? Well, it's good to, I guess, in a sense, you could only trade with slope. But yeah, because it does tell you the trend, no doubt about it. And in a sense, with the euro dollar example and what I was just showing with euro earlier, it's kind of what we're doing. You know, we had this fifth wave count or 5-wave count, and there were a lot of Elliott folk saying that we've got 5 waves down, therefore we should be heading much higher for a 3-wave correction up into the 2890s or what have you. But and that was in the back of my mind, but what you know, more important was the slope. So as you say, the trend, and more important than that, or even adding to that, is where is the best point to get in, because you know if you're wrong right away, okay, and that was right, you know, at the slope line. So the fact that you could, you know, it's much more valuable to be able to say we should be shorting at 125.05 with a 25.35 stop, for potential fifth wave extension because the slope's still down than saying, well, the trend has 5 waves down, or you could extend in 5 waves, right? So this adds some specifics, right, in exact pricing. So in a sense, yes, but I do think it's still important to have a sense of wave count and where the market could go. I'm more likely to take some profit at 22.75 if we hit that level tomorrow, because it is a slope line. At the same time, I understand the possibility for an extension in close to year end, near below 120, 1965 or something. So you don't want to scale out of the entire trade. And if we combine that, like I said before, with Elliott wave pattern, understanding that we have 3 waves down here, we have 3 waves down here so far. Then the next, if we do get a rally from here, then we should be selling that rally because it's most likely part of a diagonal in which you're going to get a 4th wave bounce and another 5th wave low, right? So Elliott wave provides context and idea, if you will, whereas slope, I think, provides really the precision. They, in a sense, both combine to provide precision, but slope analysis really does, I think, provide the most precision. Wanted to look at, obviously, Aussie dollar, Kiwi dollar as well. So with Aussie dollar, Kiwi dollar, since I started this webinar, it seems like Aussie and Kiwi have just fallen apart, or Kiwi more so than Aussie. So let's start with the Aussie dollar. So these are the charts that you've seen recently. Here we are this is the weekly level. We're just a huge level. I mean, if Aussie doesn't hold up here, I mean, this thing's really in trouble. Breaking some huge levels. What I think is, I still think that the decline from up here is a diagonal from 89.10, just based on the corrective nature of these declines, right? And then, last night, we can probably get rid of this box, or at least we can move it. Last night, after I published the update, I was looking at Aussie, and this really just stuck out, the slope lines, the ones in gold here, okay? So, if you're counting from the top here, diagonal, 1, 2, 3, we already have 2 equal legs at 84.25 from here. We've slipped a little below, but again, we have slope line just below here, okay? And if we do the same exercise that we did with the euro in wave 1, 2, 3, 4, you get 83.77 as a possible support figure. So if we combine that with the shorter term slope lines here, that's a pretty good level to expect a bounce, right? I would just watch this alone, but knowing that there's some sort of a fib relationship there is a pretty good, adds a little more confidence, I guess. But now that this level, this gray line here has been broken, you see it acted as resistance last night on the print, on the data print, GDP. This level could come into play as resistance again. Personally, strategically, with Aussie, I'm likely to, the way I approach this for a swing trade, look, if you want to try to bottom pick on this thing right here, that's up to you. I'm not going to put that as a swing trade because it's just really impossible to kind of pick a stop. And at that point, you don't have a whole lot of selling for your lows. or buying 4-year lows and being proof correct. Usually it's kind of, one in a big shot. But if you do get a bounce here, what we do is we look for resistance at one of these lines. And when that starts to line up, then we have the swing trade to sell for new 5-wave low. Okay. Especially in December, year end, you oftentimes get an extension of the trend. And the trend's been lower, obviously, and higher the dollar. So understand that Aussie dollar is coming into support level. Primarily the slope line here is what we're looking at. But with a bigger bounce, what we want to see if we want to sell. Well, I do want to sell, but it's what I want to see. So we have also, forgot to point this out, we've got this is a slope from Pitchfork. This is not like manipulated, it's just a Pitchfork. Okay, and we have that slightly lower for support as well. Looks to be at about 83.40 tomorrow or something like that. And why would you necessarily pay attention to this? Because you can see the median line from that cuts through some very important levels, right? And cut through highs up here, high here almost to the tick, spiked above it here at the end of October and then came off hard again. Want to take a look at the New Zealand dollar. So we're going to have to change some stuff here to clean up some stuff and get rid of, so we had, get rid of that. Had a nice short last week, had a good long this week, stopped out of the remainder of that long today. Okay, so let me do that. Let me just start with a totally naked chart here. So we have to ask ourselves what's going on with the kiwi. One, it's been in a tight range ever since the September low. You can see all the month opens clustered around 77.70. Okay, in October, November, December, a little higher. So this thing's coiled for a move. Which way is it going to be? Well, the larger trend is down. Wondering if we have another triangle here. Okay. So what we have is A, B. If this is a triangle, this is what we're looking at. Okay. So what you have to ask yourself now is where's the dominant slopes in this thing? Well, if I'm looking at this as a, let's look at looking at this stuff here. That might be interesting. That's interesting right there. Look at that. It touches these 3 points and they're right on to the tick on those high points right there, okay? So what we're going to do is we're going to take parallels. We're going to see if anything interesting comes of this. So I want to go back and see if this touches anything here. Somewhat. Okay, and let's say that we have from this decline up here, wave D, this is what? ABCX, ABC, a possibility. And if that's the case, then we want to see equality. Where does that happen? It happens at 77.17, and bingo. We have a nice level there, 77.17. Okay. Let's just say that if 77.17 were to hold, you would end up getting a 618 relationship with these two waves at 79.10, and guess where 79.10 is? 79.10 happens to be daily reversal resistance. This close up here, 79.13, okay? And that would meet this triangle line basically sometime next week. So, you know, the kind of thinking ahead of how a market might play out, right? Always want to be thinking ahead. So we had with Kiwi here, we basically know that 77.17 is a pretty important price level. And we also have a albeit a downward sloping, downward sloping line at that level too. Okay, you prefer to buy on the upslope, obviously, and sell with the downslope. You know, so along here it would be a riskier proposition, if you will, but could work out. And this would be something where I might actually look to put in an order if the market comes down here and sees a good response, right? Makes a bigger reversal or something of that nature, and then you look to buy for the target maybe at 79.10. But the bigger trade here, probably the sell trade for if this triangle is going to indeed complete up near 79.10 at some point over the next 4 or 5 days. So those are a lot of the pairs I'm looking at. Obviously, we should take a peek at dollar yen. So dollar yen this is the chart that was presented last night. You can see where we're trading. We're trading right around the 1976 figure. Dollar yen's been, total beast, right? So, at some point we're going to have, the late longs get flushed out, and that'll probably be the big buy again. Until then, all you can really do is try to hone in on the short-term stuff, right? And dollar yen hasn't really been one I've been looking to necessarily trade yet, just because it's been so sloppy. But I will give you, a possible scenario here. We're at this level here. This is a pretty big reaction level, a level I would expect us to get some sort of a pullback. Again, if we do have some sort of a ending diagonal, quite possible from 1723. What you're likely to see here is 1, 2, 3, find a top nearby, get a sharper pullback. If we get that, we'd be looking at support. Probably near 119, and maybe even closer to this level wherever it comes into play, if it does come into play, the slope line here, which is dotted, dash line. And that would actually be a potential swing long if that were to happen. Okay, we just have to wait for this to play out, right? Kind of in not a great situation as far as putting on a new trade here in dollar yen. Okay, it's at huge resistance. Yeah, the uptrend it's an uptrend. We know that. We have good upslope lines to work with, but we want to buy as close to them as possible, and they're all the way down here. So, in fact, we're at resistance. This level here this is resistance. So I make this a little more bold. You can see where we are. Okay, this is the pitchfork off of this level here, and this is where we are right there. It's a confluence of lines, if you will. I still think that the better place to look for a short and is actually euro yen. As you can see, we'll have to redo some of this stuff tonight. That was the chart from last night. As you can see, this line, this has been broken. That indicates change in behavior. Okay. So what we look to do now is identify resistance to sell with a lower risk entry point. And yesterday's close, 147.61. What we're going to do is 147.61. Get rid of this here. 147.61. We're going to make that bold because, again, that's daily reversal resistance, right? 147.61, just above the current level. Let's see if we have a shorter term fork that we can work with there. So yeah, nothing great as far as the move this over here, actually a new high. So nothing spectacular as far as a confluence to sell into yet on euro yen. You know, 147.61 is resistance. You know, prefer to sell again on a downward slope line, and at this point it would be a little closer to here. So that might be actually a level to watch out for too. Remember I talked about with the pound we have the hourly reversal level. So let's see where that comes into play here. And that would be, that's the 12.2 level. So this actually is a possible strategy going forward. This is something that I would definitely be looking at. With the possibility of this fork being in play, 147.97, so 148 area, basically comes into play tomorrow during Europe. That could be a sell with, you know, a stop, you know, basically 148.20. It's a possibility. Okay, this is potentially on the radar as a reaction level. Go a little higher and then come off again. Again, this is, you know, this is kind of how I look at everything going through before I write the reports. What you want to see is a confluence of levels. So those are the big levels that I'm looking at. Have a few questions on different markets. Fernando asking about dollar CAD. Yeah, so you'll notice that I don't have dollar CAD on the site because dollar CAD is just, it's not, to be quite honest, it's not a great, just not a good pair to trade in my experience. I mean, at times it is. It just hasn't been lately, so I don't want to waste my time with it. You know, I do have this chart up. It's a longer term chart. We're at huge resistance. You know, as far as short-term slope, they're really, this is 240-minute chart. This is a level I'd be looking at. So here's the slope off these two highs. Okay. And then you want this level here, right? So you want to pay attention to this line, which is basically just a channel at this point. And watch for 113 area. It's been a pretty good area of inflection points going back to October. So 113 could get you, you know, a decent entry on the long side. Two legs down. It's 112.77. $112.77 happens to be in play with this on the 8th. That's actually that's on Monday. So you have a potential level to trade into on Monday. This is a pretty good looking line right here, though. You can see this could be, you know, what you're looking for a larger change in direction. You see how many touch points you have here. So if 112.77 doesn't hold, then you'd be looking for support at this line, this downward sloping, you know, pitchfork line here. Okay, and again, everything since here is corrective from the November high. So we could have a triangle, we could have a flat. Bottom line is we're in a range here with dollar CAD. I have a question on pound Kiwi. So, Chintan, nice to have you here in the room. One problem with, you know, if you start looking at literally every combination of pairs that there are, you start to just see things and it confuses the crap out of you, like at least it does to me. So, you know, you'll see like recently I've been talking about on the website this short euro pound idea, right? But I actually haven't put any orders in for it. Instead, we've been short euro dollar and then looking to buy pound dollar. So that kind of keeps things clean for me. Now, it's not to say that there's not going to be a potentially great entry with euro pound. The reason I haven't done it is because the time to do it was up here at 79.60 and the stop was going to be like 80.40, which is a pretty big stop. So I prefer to do that, you know, by buying pound dollar with like a 30 pip stop instead of selling euro pound with a much larger stop. So with pound kiwi, you know, we have a possibility of looking towards, for the pound, we have a possibility of looking towards, you know, what I say, possibly the 158 area as part of a larger consolidation. And with kiwi, we're coming into support here as well, you know, the 77.16 area, and then we could trade higher. So it's almost like pound dollar and kiwi dollar in similar patterns, right? Because they're both in potential triangles, right? We have, here's pound dollar. Let's see, hourly chart. Here's pound dollar. This is the chart from last night. You can see these levels worked out pretty well. Right here in the sell here. Now looking for support down here around 56.45. So, you know, with pound dollar, we're talking about a possible triangle, A, B, potentially in a C wave now, which could get up towards 58 area, okay? With Kiwi dollar, similar situation in which we look to have an A, B, C, D, and then maybe an E wave up to 79 again, and then a big, big move lower again. And you're saying, well, how can this be a C wave when this is an impulse? Good question. And what happens is that when you have 5 waves in one direction, like you have here off of a low, you want to get really bullish, right? Well, that's fine, but you also have to understand that this could be wave C of a flat that started here, like A, B, C, especially when this move itself is 3 waves, right? So that's where a lot of people get in trouble with going against the larger trend, is they see 5 waves, they assume it's the beginning of a new trend, where in reality, it's more likely still with the trend, and that this just finished a wave C of a flat, okay, where you have A, B, C, okay. It's also the reason why we sold up to 79.10 at one time, and then we're looking to buy at 78.10, whatever. But move on. But just for the fun of it, why don't we take a look at pound kiwi? So this is a really long-term chart that I've been looking at forever. Eventually, I think pound kiwi is going to go nuts on the upside, like 3,000 pips. But that's like one of these macro trades that you can really get screwed up thinking about the timing of it, because, well, timing's everything, and if you're off by a couple hundred pips, it's not going to work. So here's a long-term trend line. This is a daily chart. Some interesting slopes to pay attention to here. This is a daily chart, like I said here, and this might be something that is setting up for a larger move on the upside, okay? In the near term, what we want to do is play around, see if we can find the right slope on this stuff. So this one actually seems to be working pretty well. Chintan, Mr. Patel, if you would look at the pound kiwi here, you can see that this median line is kind of a beauty in that we actually just traded into it. So, you know, if you're looking for support, former highs up here. So support might come in here at about 2.70, 20070, right? And that happens to be about tomorrow morning during Europe. So, you know, if you get down to this level, basically what I'm saying is just watch and focus. If you really want to trade on pound kiwi, then I would respect these levels, okay, because the market's respecting them quite well. Okay, so trade these levels. You know, if the market ends up drifting into this thing, this might have a really nice long to it. You know, off this level here with a tight stop. You know, with the pound kiwi, obviously, this thing can be pretty whippy. So you do have to give a little more leeway on your stops. But this is what I'd be looking at in the near term on a trading basis with pound kiwi. Okay. So here, this go off the top. Yeah, so we do have a decent change in behavior here too, it seems, going through that level. Yeah, so look, it's not a bad looking setup, right? Bottom line, follow this fork, okay, down here. Look for support at this line right here, okay? All right, we have a question here from, here's something interesting to note too. You know, this magenta line here, this is the open for the year. You know, pound kiwi is unchanged on the year after all this. Thought you'd find it. Pooja, how are you? It's great that you're here. Wonderful. And thank you very much for the comment. Great insight into your workflow. Absolutely. That's the point of these webinars. We'll be doing these webinars every Wednesday, midweek webinars, strategy webinars. You guys can watch them later too. Obviously, before I wrap it up here, quick, question here from Fernando. Do you recommend holding a short euro dollar for tomorrow's ECB? And then we had a similar question here from Dale. Very happy with my euro short, 125.05. Am I stupid to get out here? And if it trades back up to 124 area, short it again. So again, let's just follow the slope lines, right, Dale? Follow the slope lines, okay? For me, let's go to the daily chart. This is the best way to do it. It's kind of like how I would, if I were placing orders on the web page, this is what I would do. So tomorrow, this level is at 122.70 or so, right? And we do have that fib level there too. Okay, we've got the 61.8% extension of the move off of the high from October. In other words, the move from here, October high, would subdivide into Fibonacci at 122.72. It's also this level right here. Are you stupid to get out of your dollar short? Absolutely not. I would, more likely to put a target to get out of half at 22.75. Want to keep the other half just in case the thing falls apart completely and we get the real aggressive target down near 119.60. I don't think that'll happen. I'm hoping it doesn't happen because, quite honestly, I'd like to see a bounce from down here and then for the market to trade back up towards 124 region and see if we can identify a better level to reshort more up here with a tight stop again. But personally, I will keep some euro dollar shorts on. This will all be reflected later on in the, in the daily timing update. Okay, but we'll be looking at say 122.75 as an exit to take another half off. At this point, you'd have a fairly small position, but looking, to reload again up here at the 124 region, for more shorts. Now, it's impossible for me to say that the market's going to trade up to 124 and then roll over again. I just don't know, right? ECB comes in, we maybe go spike down into lows, being at the lows we're at, spike down into lows, and then get a rally of 100-something pips up to 124 something. After the dust settles, it might be time to put on another short. Okay, there's no possible way I can tell you beforehand what's going to happen. I can point out levels that I deem extremely important, and 122.70 is about as important as it gets on the downside. And then just real, kind of simply looking at where the market has found resistance and support in the last month or so. It's pretty close to 124, right? Even 23.75 or so. So, the slope will guide us. That's all I can really say, right? If after ECB the market, goes from here up to here, maybe you have a good chance for another short-term, short off this level, right? There'll be plenty of intraday volatility. That part, is much more difficult, obviously, to publish a day in advance, right, as far as the swing basis is concerned. Chintan asks, this is available for daily effects. Yeah, so this is for, this is SB Trade Desk, this recording, of course, will be archived on the website, and you guys, everyone will be able to watch it. I'm sure there's a bunch of people that couldn't attend it, and people that wanted to watch it again. More than welcome, obviously, and we welcome you to watch it, as many times as you like, so that you kind of understand how it is that we go about things. Maybe you'll have more questions, in future webinars. So that's that. Again, thank you all very much for attending this webinar. Here's Brian Curran. How do you enlarge the charts? So is it enlarge the charts? You can just use the arrows if that's what you're meaning. Like this. As far as hotkeys, I don't use any hotkeys. I don't do a whole lot with hotkeys. But yeah, that's about it. Okay, guys. So thanks a lot. We'll have this, updated and archived on the website here tonight, and really appreciate your attendance. All right. So looking forward to tomorrow morning. I'll be online early with the SB Squawk, putting up, levels and charts and anything that needs to be changed from the daily timing update, for BOE, but more so ECB. Okay. All right, guys. Thanks.